All right, let's get right into it. If you just glanced at the headlines about Qualcomm's latest earnings, you'd think it was a complete disaster. We're talking about a massive headline-grabbing loss. But if you just peel back one single layer, what you find is a company that's actually, firing on all cylinders. They're smashing analyst estimates and setting new records. It's this incredible story of transformation, and we're going to unpack it right now. So, this is the big question, right? The one that had everybody scratching their heads. A company that's literally at the heart of our connected world, and it looks like it's just bleeding cash. How in the world does that happen? Well, the answer tells you a whole lot about what really matters when you're looking at a company's health.
I mean, just look at that number, a net loss of over $3 billion in one quarter. That's the kind of thing that sends stocks into a nosedive and gets the media into a frenzy. But here's the crazy part. That number is 100% true, and at the exact same time, it's incredibly misleading.
And this slide right here, this just lays out the paradox perfectly. Over on the left, you've got that scary headline version, the GAAP version, with a $3.12 billion loss. But on the right, you see the reality of the business, the non-GAAP version. We're talking record revenue that absolutely crushed what the analysts were expecting and solid growth for the whole year. So, what gives?
To solve this billion-dollar puzzle, we really need to get our heads around the difference between these two ways of looking at the money, GAAP and, you guessed it, non-GAAP.
Okay, so think of it like this. GAAP is the complete, official story of a movie, including every single scene, even the weird one-off plot twists that don't really affect the main character. Non-GAAP, well, that's like the director's cut. It's been edited to show you how the core business is really doing, day in and day out without all the distractions. And here is our big plot twist. That massive loss, it had nothing to do with bad sales or the company being run poorly. Nope, it was all because of a single one-time accounting charge. A non-cash charge of $5.7 billion that came from a change in U.S. tax law. Absolutely no cash actually left the company. It was literally just an entry in a spreadsheet.
And hey, you don't have to take my word for it. The CEO, Cristiano Amon, he said it perfectly. He called it accounting noise in a symphony of growth. And his point is crystal clear. This loss that grabbed all the headlines had zero, absolutely zero impact on the company's actual cash or how it operates every day.
And this is that symphony of growth he was talking about. When you look at the non-GAAP numbers, the real story comes out. Revenue is up strong. Earnings per share blew past expectations. And get this, the company generated a record-breaking $12.8 billion in free cash flow this year. The business is just incredibly healthy. So, with that whole accounting mystery solved, the really interesting question is, where is all this growth actually coming from? And the answer shows how Qualcomm is quickly becoming so much more than just the company that makes chips for your smartphone. Now, handsets, phones, they still make up the lion's share of the money. But you can see two other areas are becoming huge players. You've got Automotive, which is just booming, and then IoT, the Internet of Things. And that's, well, it's everything. Smartwatches, smart speakers, sensors in factories, medical devices, you name it. These two are the new engines powering this company forward. Let's talk about cars for a second, because that automotive piece of the pie is absolutely exploding. It's becoming one of the most exciting and, let's be honest, profitable parts of Qualcomm's entire business. As a matter of fact, just last quarter, their auto business hit this massive milestone, its first ever billion-dollar quarter. That's not just a big number, it's a huge signal that their whole strategy in this space is paying off, big time. And what they're doing is building something called the Snapdragon Digital Chassis. Now, it's not just one chip, it's a whole platform. So Ride is what handles all the smart safety stuff. Cockpit is what powers those gorgeous, rich infotainment screens. And Connect keeps the car online with 5G. They're basically becoming the digital brain for the modern car. And they have a super clear roadmap for what's next. After hitting that billion-dollar quarter this year, they're aiming for a whopping $8 billion a year in auto revenue by 2029. Yeah, this is not a side project. This is a core pillar of their future. But look, cars are only one part of the story. The other huge frontier for them is artificial intelligence. And here, Qualcomm is playing a very, very different game than some of its rivals. So in this IoT space, the real excitement is around something called Edge AI. Instead of AI running on some server far away in the cloud, it runs directly on your device. A perfect example? Meta's new Ray-Ban smart glasses, powered by a Snapdragon chip. And this is all part of their big vision for an ecosystem of you, where your phone, your glasses, your car, they all work together as one seamless personal AI. And to build that ecosystem, you need developers. That's why they bought Arduino. It's so clever. It plugs them directly into a community of 30 million creators to build the next generation of smart stuff on their platform. This slide really gets to the core of their AI strategy and how it's so different from a company like NVIDIA. So while NVIDIA is all about the brute force training of these giant AI models in a data center, Qualcomm is focused on inference. That's the process of actually running those models efficiently right there on your device. So instead of focusing on raw power, they're obsessed with tokens per watt, which is basically a fancy way of saying, how much AI performance can you get out of a tiny bit of battery life? It's a whole strategy that makes AI cheaper, more private, and available everywhere. And this bet on efficiency, well, it's already starting to pay off. Even while they push AI on our devices, they're also taking this efficiency-first approach into the data center. And they just landed a massive deal with Saudi Arabia's Humain, which is just this huge vote of confidence in their entire strategy. Okay, so we've untangled the weird accounting, we've looked at the new growth engines in automotive and AI. Let's kind of zoom out and pull it all together. What does this all mean for the big picture?
Well, when you just ignore all that accounting noise, this is the story you're left with. Almost $45 billion in annual revenue, a record $12.8 billion in free cash flow, and, this is the really crucial part, their core chip business grew an impressive 18%, even when you take out their business from Apple. The diversification plan, it's working.
Now, of course, it's not all the walk in the park. There are massive opportunities here, for sure, but there are also real risks. They still have to navigate that final transition away from Apple and deal with some pretty tough competition. But having all that cash flow gives them a powerful war chest to keep investing and innovating. So if there's one thing to take away from all this, it's this. You have to look beyond the headlines. A company's true story isn't always in that big, splashy number on the front page. More often than not, it's hidden in the operational details, the stuff that shows you where the business is actually going. And that brings us to our final question. See, Qualcomm is making a huge bet that the future of AI isn't just in some giant, faraway data center, but it's right here, in the devices we use every single day. And as that shift happens, their quiet, power-efficient revolution in our cars, our glasses, our phones could end up completely reshaping our connected world as we know it.